And in our top business story, India is expected to become the UAE's top export destination by 2030, even as the total value of trade between the two countries has declined steadily over the past 2 years. Currently, Japan tops the list, followed by India, South Korea, Singapore and China, according to the HSBC Trade Forecast report, with other fast-growing export markets for the UAE between 2017 and 2030, to include Malaysia, Vietnam and Turkey, according to the survey. While India is the UAE's top trading partner, total trade between the UAE and India has been falling since the 2011-12 financial year. The figure stood at $59.6 billion in the financial year ending March, a drop of 21% over the previous year. The UAE imported goods worth $30.49 billion from India during the financial year ending March, representing a decline of 16% year-on-year. Exports to India totaled $25.11 billion during the financial year, down by more than a quarter. HSBC analysts stated that the decline is a temporary setback in line with the sluggishness of world trade growth in 2012-13 and the slowdown in India's economy. The bank added that the underlying fundamentals, such as demographic trends, will help it take advantage of the recovery of global trade, and that by 2030, petroleum products will still account for the largest share of the UAE's trade, comprising 40% of the total export growth, with India and China as the top buyers. A new survey has revealed that almost half of the UAE's expatriate residents feel more comfortable saving money in their home countries. According to the survey by compareitforme.com that measures the financial habits of the consumers, 48% of the respondents chose to save money in the bank accounts in their home countries, primarily due to more confidence in the banking systems in their home countries. Furthermore, 65.5% of the survey respondents claimed to save 10 to 50% of their salaries. According to the CEO of compareitforme.com, the figures show that the financial institutions may be missing out on an opportunity and should do more to encourage residents to keep savings in the country. As per the figures from the UAE Central Bank, total bank deposits in the country climbed 1.4% year-on-year in June to 1.4 trillion dirhams. In an effort to further sustain those figures, the CEO of compareitforme.com suggested that providing transparent mechanisms that protect depositors should increase deposits and offer the banks access to more retail funds. The First World Financial Symposium convened in Abu Dhabi today to focus on industry action to support sustained airline financial health. Over the past 40 years, the airline industry has generated one of the lowest returns on invested capital among all industries, according to the experts. Despite this, the airline industry has expanded and transformed the world, according to the International Air Transport Association. While it has defied the laws of economics so far, experts say it is critical for airlines to have sustainable profitability to move forward into the future. In his opening address, Etihad Airways President and CEO James Hogan said the airline industry faces many challenges and shocks that include factors which are out of their control. However, in the past 10 years, they have witnessed a steady growth and now serve 6 continents, all made possible through a strong government support, a sound mandate, equity partnerships and other strategies.
We cannot replicate what our competitors have done. In our space, it's a very clear focus on the right business plan to achieve sustainable profitability as we move forward. Governance, the role of finance, the role of governance in our business is critical. The way we thread it through the organisation. James Rigby, the Chief Financial, and I both started together on the same day. And coming out of legacy businesses, we were very focused that with a clean sheet of paper, we use governance as an advantage to build the platform to move the business forward.
The 4-day event will provide 600 financial executives and specialists to discuss and share insights on industry challenges and best practices for aviation financial management. IATA Chief Economist Brian Pierce says there is a need to attract $4 to $5 trillion of new capital over the next 2 decades to buy aircraft to meet the needs of the expansion in the Asia-Pacific and other emerging regions. Improving the efficiency of use of existing capital and the returns it generates for investors will be essential to attract new investment to the industry, and governments need to play their part as well.
Clearly there's a very strong demand in the Asia-Pacific and Middle East region for air travel and air cargo services. But in order to do that, I think we do need to address a number of problems. You know, we need to make the experience good for passengers. There are big problems with security, with passenger facilitation. On the cargo side, I think one of the major issues at the moment is we're seeing trade protectionism by governments, which has meant that world trade is very weak, and that's a very bad news for air transport. I think it's very bad news for economic prosperity generally. And I think finally, governments need to allow airlines to operate as ordinary commercial operations and remove some of the regulatory restrictions that's preventing them doing so.
As a result of political stability, attractive infrastructure and strategic location, Dubai has its own magic of attracting global brands into the market. That's according to the retail industry leaders speaking at the Future Retail Summit. More than 100 professionals, experts and leaders from the retail industry are taking part in the two-day forum where discussions on the future trends and growth prospects are being held. According to the panelists speaking at the summit, the UAE's fashion and fragrance industry stood at $54 billion by the end of last year, placing it in the top 5 markets globally, adding that the figure is expected to grow rapidly over the coming years. Among the top discussions also included the dramatic shift in the retail industry landscape, where brands are focusing more on tailoring services to foster customer loyalty. Speaking at the panel, Muhyiddin bin Hendi, the president of Bin Hendi Enterprises, highlighted that the entrance of principal manufacturers has made the UAE market more competitive for retailers. It was further added that with the expected 20 million visitors by the year 2020, the outlook for the industry's future looks positive.
The magic is a word that surprises everybody, correct? And right now, Dubai is really surprising everybody in the world, that with our airports, with our airlines, with our market for luxury goods, and the amount of tourists that come here, and the infrastructure that we have. And above all, I must say, the key word to the success of the UAE is one word, and it's called tolerance. We have a great deal of tolerance. We live with 210 different nationalities. And tolerance is a big ingredient for a successful retail business. The challenge is there. If the manufacturers decide to come, they either will take the business or they will get into a joint venture. So that is a threat. The online business has always been there from the last 5, 6, or 10 years. However, the experience of shopping is different than getting a package, getting your goods in that package by ordering online.
As a result of the retail opportunities in the country, panelists further suggested that it has made the shopping mall industry more diverse and competitive. Experts suggested that in response to the growing consumer demands, malls have to adapt inspiring ideas in an effort to lure more retailers to the mall.
The consumers are already connected with what's happening globally, so they expect the fashion brands, the retail offerings, the different kind of varieties of brands to be there at the time that they wanted it. And retailers retailers are providing the consumers what they want before they actually realize it.